Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And with the government reopening now, we are getting a wealth of data in covering the past 2 months within the agricultural markets. And while we were looking for a lot of changes, actually what USDA provided us, at least in this first initial snapshot here, we didn't find as many changes as I think the market was hoping for. And therefore we saw prices turn around a little bit here as we got confirmation of the size of the crops that are coming out of the fields this year. And, I would call it a mixed bag of issues when we're looking at the usage sides of our market. So, without further ado, let's walk through what USDA provided us. Now, as we're looking here, that we had missed the October update. So what we got here was the November update to the World Ag Supply and Demand Outlook, along with the latest numbers for U.S. crop production. And so as we look here at the U.S. corn table, the biggest areas of adjustment we were watching for was one, definitely in yields. And we did see corn yields pulled down slightly, but only 7/10 of a bushel. So we're still talking about a record 186 bushel per acre average when we're looking across the national corn crop, and that's leading to production of well over 16.7 billion bushels. So a record by over 1.4 billion bushels. So plenty of corn to work with here. I think the trade, and I'm going to put myself included here, we did expect that number to be a bit lower than the 186. Now, when you look at the demand side of the equation here in the gray box, USDA, the only adjustment that they made of any size realistically was to add to our export levels. So you can see now they're shooting for slightly over 3 billion bushels being exported out of this year's corn crop. And that would be by far a record when it comes to bushels leaving the country. So when we put it all together, it's still the case that production is greater than usage. And so stocks are building, but instead of being up there in maybe the 2.3, 2.4 billion bushel range when we look at ending stocks, we're now down at 2.15 thanks to that boost that we're seeing in the export levels there. And that allowed USDA to increase its 2025-2026 season average price by 10 cents to a now flat $4 as we look out there. Now, as I go through the market reaction to this, I will point out that the market is still projecting a corn price bigger than what USDA is right now. So still the market is showing more optimism when it comes to corn. Now, when we look at a soybean market, on the other hand, what we saw there was, again, some confirmation of a fairly good sized crop here. When we're looking at 2025, the soybean yield was lower by a half a bushel, but we are still talking about a record 53 bushels per acre average across the countryside. That leads to soybean production of a little over 4.25 billion bushels. So that's about 120 million less than we produced last year. So we did see the crop shrink a bit, but given the, nearly 6 million acre cut we saw in plantings, that makes sense. When you look down at the usage for soybeans, this is something where we've been keying on. Is China buying soybeans? When will they buy soybeans? And USDA had already weakened their soybean export outlook based upon, I think, the rocky relationship we've been having with China throughout this year. And so when it came to the update here in November, what they ended up doing was lowering that export number again for soybeans. They brought it down 50 bushels, 50 million bushels. So we're looking at 1.635 billion being exported here, roughly 240 million below what we did last year. And as we look at the grain inspections data so far this year, it does support the changes for both corn and soybean exports as we're looking forward. But here's a case where usage for soybeans is a little bit bigger than production, and that is allowing U.S. ending stocks to tighten. And that allowed USDA to raise its season average price by 50 cents to $10.50 a bushel. Yet, while we are tight here in the US, that is not necessarily the case when we look worldwide, especially as we look at the wealth of soybeans that will likely come out of South America later on this winter into the springtime. Looking at those yields that USDA found, they did do both the objective yield survey, when they will go out in the fields and gather what data they can there, along with the farmer survey. And the numbers you see here on the map are their estimates that they found here for November. In any state that's colored sort of pinkish to red, that means they lowered the yield expectations in that state. If it's colored blue, they ended up increasing them. But overall, like I say, they reduced the national number by 7/10 of a bushel. Here in Iowa, they brought us down 3 bushels, but we're still looking at 216 bushels per acre, which would be a record for the state. We're also seeing records in South Dakota, Wisconsin, Illinois, Indiana. So the heart of the Corn Belt, despite the challenges of southern rust and some droughty conditions, especially later in the season, that's not necessarily showing up when we're seeing these yields right now. And that's one of the, I think, questions I think a lot of folks have as we're moving forward here, is that a lot of the anecdotal stories I've been hearing would have suggested a bigger cut in the corn yield, but USDA did not find evidence for that cut as we're looking right now. Case of soybeans, it was a little more mixed here in that when you're looking at Iowa and Illinois, they held at record levels, 65 bushels per acre for each. Nationwide, again, the record 53 bushels per acre. But again, you can see sort of cuts in soybean yields towards the eastern part of the U.S., where the Great Plains, especially the southern plains, did see significant increases in their soybean yields, but they don't produce a lot down in that area, and hence the national yield total did fall a bit. But again, looking at some very good crops coming in this fall, leading to a lot of need for storage as we look to try to hold these crops and hopefully take them to some higher prices as we move into the winter and springtime. Now, looking at the worldwide totals, again, we did not see a lot of adjustment from where USDA was at in September. In fact, as we look at the projections for 2025-26 world corn wise, we are looking at record production not only here in the US but worldwide. We're also seeing a record when you remove the US from the world total. So the foreign total is setting a record as well. And we did see a little bit of increase, at least over the past couple of months, as we look down at the Mexican crop and in the European Union. But overall, not a tremendous amount of movement in corn production, but there will be a lot of competition for corn export sales around the globe. Soybean wise, we did see, again, our number fell a little bit, and we did see a little bit of contraction in India as well. But again, not a lot of movement. But one of the things that is fascinating now is with the drops in our production, we're actually seeing a drop in foreign production as well. So 2025-26 is not going to set a record in terms of world soybean supplies, but we are still looking at tremendous growth coming out of Brazil. And it is that growth out of Brazil that is limiting how far global soybean prices can move, because Brazil's been adding a lot of production over the past several years, and that's been helping hold global soybean prices down. Now, I mentioned that what USDA basically changed on the usage side, it was really the export story this time around. And while we don't have updated data yet for export sales, at least through right now, we've only got through the end of September, we can look at grain export inspections, and these have been updated through early November. And when we look at the total bushels moving through those inspections, we can see that it sort of aligns with how USDA has been adjusting the export numbers in the supply and demand tables. Corn inspections are up 66% year over year. Soybean, on the other hand, are down 42%. So this gives really strong evidence right now that despite the lack of data during the shutdown, that USDA's initial estimates on exports and how they've continued to update them have been moving in the right direction. Now, looking at the meat side and looking at feed demand, we continue to see meat demand staying, if you will, fairly stable, I would argue, but they did lower overall projections when we're looking at 2026. They took a small amount out of beef, a larger amount out of pork, as we continue to see the pork industry reducing their breeding herd, and basically trying to pull back on production by doing a little less farrowing and having that smaller breeding herd. On the other hand, broilers continuing to grow just a little bit there, but when you add it all up, we're going to produce about the same amount of meat in 2026 as we did in 2025, which means when we look at feed demand, it's likely going to be fairly stable as we move into 2026. And so when we see that big jump in feed and residual demand in the corn table, most of that jump would arguably is residual demand, not necessarily feed demand. And that usually means that we're looking at things like harvest loss and how that, big crops, we tend to have bigger losses moving it out of the fields. On the other hand, when we're looking at those livestock prices, again, they continue to remain fairly robust as we're looking out there. We do see continued pressure as we're looking at that steer price going into 2026. Whereas the other meat, the other animals that create meat, their prices are remaining a little bit more stable as we're looking forward for the next year. Now, in terms of ethanol production, looking at biofuels, it has been a solid, steady user of crops, and that has not changed over this period of time. We've continued to see fairly seasonal movements as we're looking at corn being used for ethanol. And so, steady as she goes, if you will. So, despite the government shutdown, the ag markets continued to churn along, and things were basically roughly the same as what we had expected when we went into the government shutdown. What that led to when we're looking at prices, though, is as we look at the corn market after it sort of digested the reports, we did see prices come down a bit, but arguably they came down to where they've been hanging around, for the past couple of months. As we look at the 2025-26 crop, futures right now are pointing to something in the $4.30 range. And like I say, we've been here for a little while now. On the other hand, USDA's estimate for that right now is at $4. So you can see there's 30 cents of premium here in the market when we compare to that USDA estimate. And as we look forward to the 2026-2027 crop, you can see that the market is offering us about a 35-cent push up as we look at corn prices, with that season average price being estimated by futures in the 465 range. Now, as we move to soybeans, again, in this case, what we have seen, especially within the last month, is a lot of positive news related to the potential for China to be buying. And got to admit, one of the first reports I was checking was to see if we are seeing some sales into China. And we have seen a few sales that are being registered on USDA's reports. That is good, but it's also the case of, like I say, we're not seeing the volume of sales into China that we normally do, and that's why soybean export numbers are expected to decline. On the other hand, as we're looking at that decline, that doesn't mean necessarily that we have to fall in line with USDA's estimates. And so the market right now is holding for a 2025-2026 season average price of $10.70 a bushel, which is still 20 cents above where USDA has moved. So they were at 10, then they went to 10.50, but the market was already at 10.70. So again, the market is providing us a little bit more of a premium here, I think, in hopes that we will continue to see those Chinese sales roll in, and that maybe that export line will start to move in the other direction over the next couple of months. But the challenge for the soybean market is, unlike corn, where we do have that slope of hope looking out into 2026, 27, we don't have that same type of movement here for soybeans. That the soybean market has been, and I would argue has been doing this for about the past 6 months, maintaining a sort of flat outlook as we're looking at pricing, that the pricing estimates for 2026 are basically in line with what they are for 2025. So we're in that 1070 range there as well, with, again, I think a lot of this being the, if you will, the overhang that is coming from the record Brazilian crop that is being estimated to be in fields today and likely impacting the markets as we enter 2026. So, when it was all said and done, like I say, we got the reports we were looking for, but we didn't get quite the changes we were expecting, and that disappointed the market, at least here in, or, middle of November. Now, as we're moving forward, we'll get back to a normal sort of process here when we're thinking about um, the USDA reports. The WASDE will get back on its regular rotation, as will crop production. As far as the weekly export sales data, they're going to accelerate those over the next couple of months to try to catch us back up on that data. So the data coming in here, at least November through December, will come a little more rapidly than we're used to seeing, but it's filling in that hole that we got from the government shutdown. Well, excuse me. With that, my name is Chad Hart again. I'm an extension economist. Give you a brief update there on what we're seeing in the markets, and hope you gathered at least some information from that, and look forward to providing this again to you next month when we get an update from USDA at that time in mid-December.